the last Minotaur meetup until Christmas, New Year. So I guess we're going to dive straight into it today because Marcus, you've only got half an hour, I believe.
Yeah. It's Christmas. Santa's got to do his work. Yeah, Christmas
Awesome.
shopping.
So let's dive in and have a look at your specialty, the liquidity maps, liquidity charts. There's a bit
All
of action
right.
overnight. It's been extremely
Yeah,
volatile.
it has. Let me share my screen here. All right. Waiting on it to load, I guess. Oh, there it goes. All right. All right. So what we've been doing here is, I think we might be setting up for a retest, or we're the last couple of days here. We have been rejecting. There's this little local range here, and we have this little point of control there, a local range, and we've been rejecting off this midpoint here, this point of control, pretty significantly the last couple of days. So there's a possibility we might come down here and sweep this low at 81 or 80,000. So need to be prepared for that. But other than that, we're still on schedule. There's nothing that I see alarming. Everything is working according to plan. Uh, the liquidity's coming in really nice. There's another point here that we'll need to have this return liquidity fully in place. So that's coming. Um, you're just looking at some of the other time frames. Like when you just look at only the five, everything looks really good there. Got five coming in here, and we're going to have some liquidity closer to the point of control, right in this area here, before we can go up. So this has to fill in, and I think it's coming in real nice. Yeah, like here the 10x, it's coming in there.
Yeah.
So just gotta, it's just a time thing. All this stuff works out together. Um, like from a time standpoint, we're at day I think 28 now.
Yep.
Yeah, about 28 days. So 55 puts us, let's just say 60. That is like January 20. But yeah, January 20, and we should be like by the time we get to January 20, let's say we sweep here a little bit. Uh, January 20, somewhere in here, we should be ready to take off from this level here. So liquidity will should be in here by then, and
So
that's what we're
when did you
looking
say
for.
by 20th of?
Probably by the 20th of January should be ready to go time wise if we
So we
rhyme.
should. So potentially we could be up close to 100K by then.
Yeah, we should be close to 100K by then. Yeah, actually, we have a head start on this one by 5%. We're 5% higher than last time or more. Yeah, so we could be higher than that by then.
Talk to me about the sweep, 81. I've heard that I've heard from a few people that the weekly won't print a lower wick than that last sweep, right? So are you seeing anything potentially below that into, I know a lot of bears are calling out the 7 years, and you mentioned 80, 81. What are you seeing as evidence that we're not going to go into the high to mid 70s?
Well, there's a couple of things we can look at. Um, the first thing is we can look at the volume too. The volume is also very important. This low this value area low here is also confluent with this local range here as well. So we have a double support here. That's why the price is holding up a lot right here. And there's a high volume node sitting here. As you can see right here, there's a high volume node here. So there's a lot. That's a very strong support level there.
Yeah.
That that's trying to hold. If we lose that level, then we have a low volume node here, and we can fall all the way down to about 70. maybe 78, 77. So we could drop pretty quickly to here, to this point, to this zone right here in the high 70s. And if we lose that, that's where all that other stuff is coming in. So we have like, so if we lose this area that we're in now, we could drop pretty quickly to 80, 78, 78K pretty quickly. There's not much here to stop it, the price. There's
So
a
there's
little bit of support there at about 76. So that's what everybody's talking about. If we lose this level that we're at now, we could go there pretty quickly.
So what are your chances? What do you think the chances of that actually happening? I'm seeing a lot of people saying that it's not going to print lower than the 81 that we swept last time.
Let's go back in here and take a look. So let's see what's coming in.
I'm trying not to be too bullish, but I do want to give people
Right.
watching a sense of the potential.
Just be prepared to defend that if we have to. I mean, we still got bullish structure until we get to 74.
Yeah.
So even if we come down to 76, 77, we're still we still didn't take this low yet. So that's still not necessarily all that. It's still somewhat bullish. All right, so we've got 25. Let's see here. 10. 10 is at 73. That's pretty, yeah, that's pretty low there. There's at 78. There's not a lot to pull us down there from this perspective. Let's drill in a little bit closer here. Let me duplicate this. Let's take a closer look here on the 4 hour. See what we see here. All right, so let's take out the 3. So this gives us a pretty good perspective on. Let me bring it in here. All right, here we go. So this gives us a pretty good perspective on how the new liquidity is coming in, right? So you can see that we have 5x starting to sparsely come in here.
Yeah.
But what's interesting though, last time, I'm just going to look at the 5 right now. When we got finished with the 5 last time, when we finished the 5, we went for the new 5 and we didn't touch the new 5 that developed under the price, right? So in other words, when these lows were put in, this is new 5x here.
Yeah.
This 5x is coming in on these rallies here. It's coming in here. So the point is we didn't go after the new 5. This is new
So
at this particular time, right? And then this was created on the rally up, and that's what we took out, right? So we went after the new shorts, right? So coming back over here, look here, we've already taken out the 5, right? So typically we don't go for the new 5. So let's see where the new 5 is. This is all the new stuff, right? Coming in. So if you have a bullish case, you're not going to really be touching that new 5 if it continues to hold up. So if you look at the way if we look at the way this accumulation has happened, this is a model 1. It's with higher lows and not a big capitulation. So that could potentially hold. So there's a small bullish case here that we don't go into this. So now one of my favorite things to do is I like to use 3 liquidities to see if that's like 3 of a kind. So we got 25x sweeping the low here coming in at the low. This is all new liquidity. The new 10x is confluent with this level right here. And the 5x is kind of confluent with that level right in here. So you have 3 major liquidity zones all confluent with this 80K. So before you go lower, like into the 76s and all this other stuff that has been around, you're probably, if we're going to go down here, we're probably going to tap this liquidity here. It's just this area. So we have 25, we have 10, and we have 5 all in the same area there, which we know that's a very strong signal when you get that. So the bullish case, we come down here, sweep that, and get back out of here. The bearish case is if we come down into this area, this is old liquidity here. You're kind of getting into 3x now. I mean, that's like 3x, and we typically stay away from that. So I think the bullish case is still intact myself.
okay. So potential sweep down to the 80, 81 levels. We see this really sharp candle, this red candle from last night. I know you did a post on this that you're about to share with everyone on X in about 20 minutes or so. Do you want to talk about what happened last night and what that looked like?
Yeah, that's here. You can see it more clearly on the 15-minute time frame. Let me back out some of this, make it a little cleaner. All right, so basically, that uh, was a short squeeze. Start off as a short squeeze. So you just look at the 25x here. That's what we're showing: 25, 50, and 100. So we had a short squeeze on the 17th in the morning. Asia had kind of pushed the market down most of the Asian session. So we had a nice short squeeze, and then we had a severe reversal. I mean, that was really, really nasty, and a lot of traders got caught in that.
It came down as fast as it came up, Marcus. The candles
Yeah.
were nearly identical.
Yes, very, very, very wild, and that's why I'm glad I have an algorithm, because that would have been hard to trade manually. And that wiped out both sides. It got the shorts and the longs who chased it. Let me show you some longs. So we get into some of the shorter liquidity. Let me zoom in here. You can see them. They chase this thing up. So yeah, you had all these longs when it started running. You had longs just chasing this move. Some in there. There's some here, and then the market came right back and wrecked them, coming the other way.
And you can
Just
see
completely wiped out everybody. Both pools. This pool built up overnight, and this one built up. It got both sides, longs and shorts.
I always like to say, and it's interesting how it works on each scale, but like I always tell people that we need to remember that both long and short players always lose 99% of the time. So on the grand scale, like they've taken out all the longs now, we know all the shorts are going to lose. It's not a matter of how, it's a matter of when, right? That's the important point. But it's interesting to see, even on these lower scales markers, how the market forces both sides to lose.
And this is why trading algorithms beat humans over the long term. You might beat it occasionally. Is look what the algorithm did. The algorithm took profit off the Asian session. It had been building positions on liquidation, so it was taking positions as longs were being forced to sell out at bad prices. The algorithm was taking positions, lowering its basis. So then that morning, you had all this short liquidity building up in here. So the market makers drive the price up to take all this liquidity out. So what does our algorithm do? It sells into that move, takes profit. So then when the market makers bring the market back down to wreck the longs, what does our algorithm do? Take positions while the longs are getting. This is all within 1 hour.
Isn't
1
it
hour of
cool?
time. That's crazy.
And it's like when you look at that, it almost feels predictive. But what the algorithm is actually doing is it's always in position before the move happens, and then we take profit with the move, right? So like the whole concept is building up before the move happens. It doesn't need to be predictive. It just needs to make sure that the entries are placed before we go up.
So look what happened. You took out the shorts. The algorithm sells long positions that it accumulated earlier. Then you wreck the longs. It takes positions as the longs are getting stopped out and liquidated. It's taking positions. And then when the shorts that chased that, it came and took those guys out and it exited and profited again. So 2 profits all within about an hour. So that's why I love algorithmic trading. To do that on a manual, it's been almost impossible. That's hard to do. So that's pretty cool.
That's really nice to see that. Actually, it is really cool. But yeah, it's been very emotional for people. It looks like on social media, people aren't handling this very well.
Yeah, well, when do they ever? I make the argument, and it's just, I think, really like time and time again, it's just harder and harder to know who you should be listening to on these places, because really, like, you got to understand that the analytical people who are calling the bear market, the second Bitcoin breaks out, will start saying it's bullish. So, there's no conviction to any of this stuff, which is why it's so easy to be emotionally swung around like a yo-yo, right?
Yeah.
Yeah.
And then look at the FUD. I mean, look at all the all the media. So yeah, a lot of people got chopped up on that $100 billion, taking out 50 on each side. It's crazy.
Yeah.
And this happens all the time. Actually, when you see it right here, the algorithm was taking positions here, and it just carried them over here and exited them there on these shorts getting liquidated. These were the longs, picked up positions here, sold them off into, as these guys are forced to buy, the algorithm sold into these guys. And then the market makers' algorithms weren't finished. They came and wrecked these longs. We took positions again. And when these longs got, these longs were wrecked, and then these shorts that were sitting in here, it sold off sold to these guys. And it just keeps doing that over and over again. It's something it's good to be
It's a
on this side.
it's a well-oiled machine, isn't it? It's like a rotator. It just keeps going around in circles.
It's like I always say, which end of the gun do you want to hold on to? I'd rather be on this side than the other side. Yeah. So that's what's going on right now.
Did you want to do a share at all, Sebastian? Or
Yeah, I'm happy to. Let me just pull up something.
I can jump into something as well. I want to do an update.
Yeah, I'll just do a quick one, Kosta, and then you can take over.
I'm just going through a couple of the bots I set up. So if anyone's been watching the YouTube channel, we've built some sort of large 6-figure bots recently because I want to keep track of these. So this is looking more like a kind of large swing trade now. We entered at around 92, and you can see these trades aren't happening too frequently. We had one on the 11th, one on the 14th, one on the 15th, but the size is getting pretty big, 0.3 here, 0.5, half a Bitcoin there. And you see we came in, got into our break even when we hit that 90. We haven't been able to capitalize on this kind of whipsaw because it's a much bigger trade. But, our take profit target there at 92, which is a really nice price, I think, for this trade. And we're looking at around a 3.5%. I think 3.5% this one I've set too. So, 3.5% take profit on that, which is going to be a decent trade. It's a 6-figure trade right now. I think 125,000. So again, big money pays out big time. And again, we're not doing anything, just watching, just making sure the trades are executed and everything looks on track. And knowing the system and how it works, this is looking nice. I think it's going to hit TP very soon.
Yeah.
And again, plenty of room to walk the price all the way down, probably to these levels here if we needed to. We're a long way away.
Easily.
Yeah. So the best position to be in now is make money if the market goes up, hit your TP, and if it goes down, keep DCAing in, bringing down that take profit. Eventually we're going to get out somewhere.
Yep, looking good. That's how we draw it up. So,
Seb, did you want to have a look at anything?
Yeah. Let me share my screen now. Guys, let me know when you can see.
Yep.
Cool. So this is the algo running on a 4-hour time frame. Marcus loves the 4-hour, and I do as well. And it's important to remember that our algorithm can be run on almost any time frame with some limitations as you get to real high frequency. But when it comes to 5 minutes, 15 minutes and above, all the way up to the 4-hour, it trades beautifully. And I think, what I wanted to show today, and I've shown this chart in the past, but I love showing it because, you get an idea of how we traded going down last time. So a lot of people always ask, how does the algorithm perform in bear markets? How's it going to perform, in extended downturns? And really, this is the double peak. And I mean, you can see how frequently it's trading on the 4-hour time frame and how well the precision of the trades have been placed. I mean, I like to show this over and over again because we posted our last safety order literally at the very bottom of the market. And I mean, this is the last time we really bottomed out, guys. I think it's important to note that since this safety order got posted and we closed our positions liquid at 20K, really Bitcoin actually has just been on like kind of a big bull run the whole time. I mean, if you look at the price action here, we haven't seen huge corrections and we haven't really seen extended bear market periods. What we have seen is sideways action and sell-offs, but if we actually track and measure the sell-offs, this is really interesting because on all of the legs, they've been an extremely similar distance in terms of pullback. So if we look at this move up here from 60K, we ran all the way up to 110 and we had this kind of pullback back in April. I want you to note this percentage here because this was a 33% pullback. Now, eerily similar to where we've posted right now. After we had that pullback from 74K, we then posted another huge move, 73%, and Bitcoin topped out at about 126K. From here, guess how far we've fallen? Within 0.5% of the previous pullback, 33 or 34.1%. I mean, these numbers are eerily similar. Let me show you another thing. The consolidation period before we ran up from 74K to 110 was roughly, let's say, 40-ish days. Right now, the consolidation period's been going for around, let's say, 30 to 32 days. So all these averages, they're tying into similar movements. And what I want to show everyone is we're still actually posting higher than we did previously. This is what Marcus pointed out earlier. So really, the way the algorithm sees it is it's not thinking about, are we in bear, are we in bull, are we in this, are we in that? All it cares about is that it has enough margin and capital to disperse its way down. And with the way it's seeing this last correction, I mean, most people are dead in the market. We're simply executing safety orders, right? So we're at this point now where we've taken a lot of positions. Our average price is, say, around 96K, and we're going to close all of our positions at 100. But I guess some people may come onto this show every week and go, how are these guys able to continuously have a positive and bullish outcome when the market seems to be falling? Well, the reason we are is because we're not in danger, we're not worried, and if the market continues to fall and goes bearish, we're going to continue to buy and exit at a lower level. So for us, one thing you'll notice is we are bullish on Bitcoin. We're not unrealistic, but because we have the tools to trade it all the way to the top and then trade it all the way to the bottom, we don't really have fear of extended bear markets or heavy selling pressure when we're able to be a part of really what the market makers do. I mean, we're not exit liquidity, right? We're playing chess. So just wanted to point that out and show everyone how it's traded from the last bear market to today. And it's important to have context. And this is why I don't listen to X and I very rarely listen to the news, because most people are just spitting out opinions based on what the price is doing today and not actually looking at what it's done in the past and verifying any of the data.
Yeah, I think that's a good point. Marcus?
Yeah, I think so. And he hit on a lot of points. Once again, to add to what he's saying is you have to keep a big picture outlook. You can't get caught up in all the noise and the emotions. Trading is not based on emotions; it's mechanical. You don't. But we're humans. We like to get in herds. We like to get super negative or super bullish or bearish, and we let that drive our decisions. And if you do that, you're just playing right into the hands of these machines. They don't sleep. They don't eat. They don't have any feelings, or they just execute. It's like the Terminator movie. They don't stop. They hit you going one emotion, and they'll hit you with the other emotion. They use both emotions against you. You're greedy, they're gonna get you. If you're scared, they're gonna get you again till you stop doing it. They don't stop.
Yeah, that's right. That's right. I mean, it's an easy market to get lulled into a false sense of security, especially when price is going ballistic. And that extreme mania, I think, to bring that point up, that little candle the other day, well, not little, but we went up to 90 and went back down just like that. To me, that's just like a microstructure example of what happens on the higher time frames, just at a much faster rate, because it's the same process, right? They always find a way to get both sides of the market, right?
A lot of, just to speak to that, I wanted to touch on that again a little bit. These violent down candles, like we had the last couple of days, we had like 2 in a row. very violent. It makes a strong rally, then it just reverses very violently. Those moves are not by chance. Those are called inducements. It's kind of like if you fish with a fishing lure, you kind of work the lure to make the fish. You got to put some action on that lure so the fish will strike, right? So the market makers collectively do the same things. You need that violent down move because I've been watching the liquidity for the last week or so, and the short liquidity was a little bit reluctant to come in. It's not coming in the same rate. The short side wasn't coming in good enough or strong enough. And what happens is, what do you think these last couple of days, those moves, those violent moves down, is inducing a lot more shorts into the market. Those shorts are what's required to go up. It's kind of like it's counterintuitive. You got to go down to go up, and you got to go up to go down. So we can't go up if we don't get shorts into the market. So that violent move down is pulling more shorts in than the usual. If we had shorts already in the market, if we had more than enough shorts coming in, then it wouldn't have been so violent. Those violent moves up or down is pulling in the opposite side. They call
Yeah.
it induced. Smart money traders, ICT guys, they call it inducement. But that's a good word. It's actually inducing you to trade on the wrong side. So that's what it's doing. No, there's no
Yeah.
missed moves. We're talking billions and trillions of dollars. No moves are for nothing. Everything has a purpose.
That's
Greater
right. And it
purpose.
brings up
Yeah.
the point, like, the real thing I asked myself after that is, if leverage is out of the equation, does that happen? The answer is no, right?
No.
Like, it
Yeah.
doesn't. Like,
Yep.
it's
Yep.
only
Yep.
able to do that due to, and not just leverage, due to over leveraging. In fact, the market was only able to pull back 40% recently because of how many people were long, right?
Right.
That, it's important for people to understand that. And remember, what's happening now is not a bad thing. It's healthy. Bitcoin traveled nearly 1,000% in value, and the three pullbacks it had along the way were only roughly 35%. So if you compare a 35% drawdown relative to 1,000% price increase, it's not even really that bad. We need to really remember that because, and I'll encourage everyone to remember this, if price is going vertical, it's going to do the same thing going back, right? If you have a healthy price action, which accumulates over time, the corrections will be healthier. It's all relative to what price is doing. So don't get excited about vertical price action because it means it's coming down vertical as well, just like we saw the other day. That candle, I keep coming to it, but it was vertical up and vertical down. It was almost like a blip in the market where it wiped out whatever had happened within the span of what, Marcus? A few minutes. It felt like,
Now less than an hour.
yeah, less than
But
an hour.
but the medicine that was needed was we for the last few days, the shorts have been a little bit reluctant to enter into the market for some reason. And we needed to go bring more fear into the market, and those two moves did starting to do the trick. So that's bringing those shorts in because they're going to chase that move, and that's what going back to what Costa was talking about earlier. That's why we would sweep that 80K low. That's going to bring a lot of fear in the market, and when that fear comes in, that's going to bring those shorts in like a herd of wild. I don't want to say buffalo, but it's going to bring those shorts in, and that's
Yeah,
exactly what we need because we can't go higher without them. We
that's
need the
such a good
fuel.
point. That's
Yeah,
such a
we
good
need the
point.
fuel.
And the further they drag the market down, the
The
more
more
short
they
they'll
come in, the
liquidate
more
on the
they
way
come
back
in.
up. Yeah, yeah, that's such a
Yes.
good point. That's such a good point. That they will just drag it down to the point where, right, like they get as many shorts as they want
Many
on the
as they
book where
can.
the
Yeah.
depth
Yeah.
is so full, and
They can
then
move it.
they'll send it all the way. And
Right.
remember, no one is buying on the way back up. They're buying at the top. Their conviction to buy Bitcoin is not reset until the news or until crypto Twitter is telling them that now's the right time to buy. And what do you think happens when they click the buy button?
You're adding yourself to that liquidity pool.
And then
You're putting yourself in that pool.
that whole move that happened all the way down, the exact same thing happens, right? All the way back up, all the way back down, all the way back up, all the way back down. And you
Yeah.
wonder why you exit liquidity, right?
Yeah.
You wonder why. Well, that's why.
I often wonder why people get so depressed when the market is down and they get so happy when it's up. It doesn't really matter. uh, where it is or what it's doing really doesn't have much bearing on anything. Uh, Over the long term, your Bitcoin is going to be fine. It's going to be 10 times, 15 times, 5 times worth more than it is now. So all these moves don't really matter, but people get caught up in all that stuff, in the wrong times.
Well, I always like to say that, if people are really depressed and emotional and sad when the price of Bitcoin's down, where they were running their levels of risk was somewhere where they'll get liquidated. Or, like, you only ever feel bad when you're heavily underwater in huge drawdown or you've lost your money. And if you have, and that's happened to you, in a lot of ways, and look, I'm not pointing the finger, we've all done it, right? We're all traders, but you kind of have to learn when you get that trial by fire to know not to do that again, right? And it's happened to me many times, right? But just don't ever tell yourself that Bitcoin's price can't go here, because it will surprise you. I promise you.
Well, what's funny is those same people, when it comes to other types of business activities, everybody wants to catch a discount, 50% off. They want to chase a sale, Black Friday. Everybody's looking for sales. They want discount prices. No one wants to go shop at Best Buy or wherever your local store is and wherever you live in the world when the prices are at the highest they've been all year. No one
Yeah.
wants to shop then. You know, Everybody's looking for a coupon, a deal. But when it comes to trading assets and investing in the
Such a
markets,
good point.
they lose their mind. They lose that concept completely. They want to buy at the highest times when the prices are at their all-time high. Would you buy your television for your digital TV or computers or whatever you're doing when the price is at all-time highs? No, you're going to want to get a Black Friday. You want to sell. So they don't see it like that when it comes to
That's such a good point, and that
yeah,
shows the difference in institutional accumulation. And not that
yeah,
that always has been perfect
yeah,
either, but that's such a good point, Marcus.
yeah.
They buy it when the price is so
At the
high, but
highest it's ever been.
when the price is at a point where
They
it's
get
at
mad.
extreme value, they don't want it. They don't want it
Yeah.
down there because they
They
don't
get
think it's going to go back up.
they get mad. They get depressed. It's just
Yeah.
on sale.
Yeah,
It's a Black Friday. You should be happy.
yeah, exactly.
People get excited for sales. Why they don't get excited for sales on Bitcoin? The best thing you could buy on the planet is on sale right now. Be excited. But no, they want to buy it when it's high as it's ever been and sell it now. Yeah. If we can figure that out, that's a brain transplant for people there. I don't know what they're thinking. But it's on sale right now. 30% off right now.
Scott Park says, Sebastian, what's up, buddy?
Is there a chat? What's up, Scott? How are you, man? Good to see you on the show, bro.
And one for Marcus.
Scott's one of our
what's
customers.
going
He's a
on?
good man.
Hey, yeah. Well, that's what Michael Saylor said the other day. He just bought 10,000 more. He was excited.
Yeah, he's
Yeah, well, he would have been excited because all his other buyers were at 120K.
Yeah. I mean, he was more than happy. He was more than happy to get in this consolidation right now. He just picked up 10,000 more Bitcoin. He's excited.
Yeah. Well, their strategy is to buy Bitcoin. They don't really give a shit about what the price is. Excuse my language. But yeah.
Ultimately, you're right. Ultimately, they don't even care because they
well, this is what's interesting. I guess sometimes I think, man, they're not placing the greatest buys. But I think what we need to remember about strategy is the way they see it. They're buying Bitcoin at 10x, 20, 30 times less than what it's going to trade at in the future. So if the way they say it is, then yeah, it is strategy buying it at these prices, right? It is strategy because in their eyes, it's going to $3, $4, $5 million a token. So
that's what they're looking at, yeah. And I think you said that the other day, didn't you, Kosta? Said, would you care? What if you had a chance to buy something today that was going to be worth $1 million in some years from now? You would be emptying the ashtray in your car. You'd be looking under the couch. You would be trying to find every coin you could, every bill you could, all the money you could scrape up and buy this. So I don't know, man. People get short-sighted, I guess.
I think that's one of the reasons why what we have is so important, because it really does take away your need
pressure.
to the pressure, because I think one of the biggest problems with trading is position sizing, and it's where a lot of people get caught, because what having a system like ours allow you to do, it allows you to engineer the position sizing from the outset. So you're deploying the capital as the price descends, and you're doing it strategically, and it's all pre-done. So you're setting money aside for when there is a bargain, right? It's like being in January and saying, okay, come Black Friday, that's when I'm going to spend my most money, right? But I'm going to spend 2% in February, I'm going to spend 4% in March, I'm going to spend 10%. But by the time November comes for Black Friday, I'm going to spend 50% of my money, 40% of my money, because that's where I know the best buys. I'm going to get the most value. It's kind of like what this strategy is like. It's saving the most amount of money for when the price gets the lowest, right? When we're getting into really those value levels. So trading is emotional, and it's psychological, and it's all these things, and being strategic, engineering, and architecture helps remove emotional decision making. Just make sure that your capital is going to be well placed. So that's kind of what we do with a lot of the tools that we have, the algorithm itself, but also the DCA calculators and the applications that we're using in order to effectively come up with these numbers and then distribute it effectively as well.
Exactly.
Yeah.
Yep. So, good point.
Cool. Did you cover the node? What the node is for the question? He was referring to the volume node on the heat map.
Oh, what are you referring to when you say node? Okay, I can show you that. All right, let me share that here. So what I'm referring to on a node is using the volume profile. And there's two things that we like to track. There's 1,000 retail indicators out there. The ones that we use are the same ones that matter to the institutions, market makers, the big players. They are interested in liquidity and volume. And what's good about this type of volume, this shows you where the price has traded, already transacted, not limit orders, not spoofing orders, but where the transactions occurred at what price point, what level that they occurred at. So this is a very, very powerful tool. So when you have volume and where the liquidity placements are, you have all the tools. It's very simple, but you have the most powerful tools that, in my opinion, that exist. So these are clusters of high volume. This being the highest, that's why we call it the point of control. So these are high volume nodes. These are areas where the most transactions occurred and at what price. These are areas or zones or price ranges that the market likes to do business at. So it remembers these ranges. And conversely, when you have the inside, these are low volume nodes. These are areas where the market did not like these prices. The price did not stay here very long. If you kind of notice that the price shoots right through these low volume areas because there's not a lot of takers there, or there's not a lot of business conducted there. The market did not like those prices. So these high volume nodes act like magnets for price. You can also see that price reacts to them and finds support on these high volume areas. And it can also act as resistance as well. So yeah, that's when we say node. High volume nodes, low volume nodes, low volume, high volume. So we use those to give us very, very high confluence on what the market is doing. And that's what we use as our basis, fundamental basis there.
All right, awesome. That answers your question, Stephen. All right, guys. So I guess we're going to probably take a hiatus. I might personally jump on and do some live updates on X and YouTube if there's some significant price action. And if I don't have time to get everyone together because everyone's going to be on holidays, I might just do those myself just to keep viewers up to date on what's going on with the trades. But we'll definitely be bringing back the show from the fifth, actually probably from the third week of January onwards. It's been a pretty busy year, but I think next year is going to be even more exciting. We're going to be releasing our application probably in the first quarter of January, which is going to be really exciting. We're going to be bringing a lot of the stuff completely in-house, and we've got a lot of cool extra features that we're going to be rolling out with that. We're going to be back on with Giovanni. He'll be back in the States. and he'll be back on doing the live shows with us as well, which is going to be really cool. Any other announcements, Sebastian, for next year? Oh, the other one is we have the webinar tomorrow with Giovanni. If anyone wants to join that, there's a link on our X as well.
Yeah, no, nothing else from me. So we're gonna have the software done this year, and we're gonna roll it out in January. So we're nearly there.
Fantastic. All right, guys, thanks a lot for joining today's show, and we look forward to an exciting 2026.